DKNG, DraftKings. Let's talk about it a little bit, okay? I really like DraftKings. Obviously, in 2020, ever since we hit the market, we had that crazy, insane move all the way up to the what was it, 72, 73? Was it that high? 70, yeah, 74. 74 back in March. Okay, ever since we came off those highs, we hit all the way down here and found some support at 39.92. I'm just going to go ahead and draw a trend line down here at 39.99, 39.92. That seems to be where we based out. From there, we did get that bounce, did pass and reclaim the 50-day moving average, tried to make a push higher, got rejected at the upper Bollinger Bands back here in June 9th, 55.96. Had a little bit of selling pressure here. And then I was getting a little bit excited about DraftKings. I had made a video. A few people kind of got on me because I called DraftKings dead money. But I mean, that's when we have stocks like Amazon and Nvidia and Apple and Microsoft and Facebook, stocks that have been breaking out, the NASDAQ 100, the triple Qs, ever since they reclaimed the 50-day moving average, they've pretty much gone straight up. When you got stocks like that on the table and you're a day trader and you're a scalper, and these stocks are giving you 5, 10, 15, 20 points, Amazon 100 points in a day, it's kind of hard to sit and watch DraftKings' slow action every day. So you get a little bit spoiled trading the big tech stocks just because they move so fast, and you can get in and get out and kind of make your day and then be done with it. The first hour, 2 hours of the market open when the market is most volatile. I started to get a little bit excited about DraftKings because, going back here, June 25th, we broke above this 50-day moving average. We have the 100, the 200-day moving average slightly above us. We did get stuffed here. We got rejected at the, what is this? Is this the 100 and the 200? We did get stuffed here at the 100 and 200-day moving average, got pushed down a little bit. However, it looked like we wanted to bounce off the 50-day moving average again. Have a lot of supply in here. Let me just make this a little bit bigger. Got a lot of support in here. And then today, obviously, we had a little bit of a sell-off, not just DraftKings, across the market. So before anyone says, well, it's not just DraftKings, look at these other stocks. Look at Tesla's down $14 on a day. I understand that. Okay, I'm not just saying it's DraftKings. However, these things all go together. When they're going to go together, when one stock goes down and when an index goes down, generally speaking, these smaller cap stocks, these micro stops, these these small caps, they generally tend to get hit the worst. So the growth in the speculation stocks, they get hit first, and they get hit very aggressively. And because their dollar cost is not that high. This is a $48 stock. Taking a $1, $2 hit, $3 hit on this thing, I mean, ever since coming off of even the highs of 55 as of late, we're down $6-7. That can really start to affect your portfolio. If you're a long-term investor in DraftKings, nothing to worry about. This stock will probably be over 100 in a year, 2 years time. Nothing really to worry about. But if you're a swing trader, you're a day trader, there's some levels that you can play with. It was giving you some levels that you could bounce, take it for 50 cents, take it for $1. And then you can also short it back down to the downside. Kind of predictable, however, just not enough true daily range. However, today is the first day that we closed below the 50-day moving average. Generally speaking, anytime we close below the 50-day moving average tends to be bearish. So we need to see if we get some sort of confirmation on the follow through through this bottom price action here at 48.75, 48.53. If we do, look to pick up DraftKings if we bounce off this lower Bollinger Band here at about 47.31. Anywhere between $47 and 47.40. If we'd start to bounce off this area, you see us start to consolidate sideways, and then we get that push higher, that would be an area of opportunity where you can potentially bounce it back into the 50-day moving average at around $50. However, if we do get a close on the daily time frame below this lower Bollinger Band, just know that we have a lot of room down. We could potentially, if the market wants to correct and sell off, we could potentially get back down to these all-time lows here of 39.99. If we were to come down here to 39.99, I do think that we would probably bottom out once again, kind of trade sideways, and then do what we did again. So you have two areas of opportunity for a bounce here. You're looking at 47.40, 47.30 area, and you're also looking at 39.99. Any close below 39.99, I would just kind of stay away from the stock and kind of just evaluate it and watch it just to see what it's going to do. You don't want to take a bounce here at $39.99, $40, and then this thing ends up going down $35, $30. The whole market's in shambles, and you're kind of just left holding the bag. Let it stabilize, let it consolidate sideways, let it get that first leg up, and then when it gets that first push up, then that's when you can take the bounce opportunity back to the next area of supply. Guys, if you like this video and you watched all the way to the end, please smash the like button, hit the subscribe to my channel. Also, I do have a private Discord where I put out daily watch lists, talk about the stocks that I'm trading. Good community of guys in there, very, very helpful. I am live in there via audio and chat the first 2-3 hours of the market open, 5 days a week. Feel free to reach out. It's less than $1 a day, guys. So if you're actively day trading, you kind of need some help with some of these levels, kind of looking for some strategies that you can use for day trading and swing trading, I can pass along the information that I have learned along the way. But until next time, guys, I will see you guys all in the next video.